What is up, guys? My name is Nash and welcome to another video. And what is a stock split? So that's what we're going to be talking about today, whether you gain more money or you actually lose money from it. And most importantly, for the dividend investors, what happens to their dividends? Do they get multiplied? Do they get cut in half? So I'm going to be going over that in a little bit, but before we do that, we're going to go ahead and read, the definition of a stock split from Google, and I'm going to go ahead and explain it after that using great examples. A stock split is a decision by a company's board of directors to increase the number of shares that are outstanding by issuing more shares to current shareholders. So they're basically giving you more shares. So we're gonna look at an easy split, which is a 2-for-1 split. So basically what happens is that one share gets cut in half and it turns into 2 shares. So I'm just going to be using a 2-for-1 because this is kind of like easy to comprehend. All right, let's say a company had 10 million shares outstanding and it goes through this 2-for-1 split. And so at the end, it's going to have 20 million shares because it was cut in half. All right, so you just multiply by 2. So if it was a 3-for-1 split, you multiply by 3. All right, so if it's a 2-for-1 split, that means that the price per share is going to be cut in half too. So if you had a share for $100, that means it's going to be cut in half. So you're going to have 2 shares and each is going to cost $50. And you might ask yourself, why do companies do this? Are they losing money? Are they making too much money? So the reason why companies do this is because that their stock price has gotten too high to the point where small investors are unable to buy the stock. Just imagine if Apple stock went up to 8,000 per share, right? That's not realistic, but that's kind of like a good example. But regular investors like you and me wouldn't be able to buy that many shares. They go through a stock split, which will lower the price. And when the price is low, this is going to attract small investors because the stock is going to look affordable. So usually when this happens, when the price is cut in half, if a stock was $8,000 and now it's $1,000, what's going to happen? So the demand is going to go up, right? Everyone's going to start buying it because it's affordable and it's more attractive. And that's going to drive the price of the stock up. So now you might actually make a profit from this split, or you might lose money because the stock market is unpredictable. You can't predict if you're going to make money or not. All right, so we can't talk about a stock split without talking about a reverse stock split. So this is kind of like the opposite. So most of the times when sometimes when a company's stock price is really low, they might go through a reverse stock split. So this actually multiplies their stock price. They do this by combining shares. So let's look at a 1-for-2 reverse stock split, right? So let's say a company had 10 million shares outstanding, right? And it goes through a reverse 1-for-2 split. Now it's going to have 5 million shares outstanding. So this is going to reduce the amount of shares that are outstanding. And it's also going to increase the price. So you can multiply the current price by 2. And then now you have a higher price. So why do companies do this? So they usually do this because it looks attractive. They want to gain respect in the stock market. So just imagine, if you're a penny stock, everyone just looks down the penny stocks. Oh, that's a penny stock. But if they're able to move from that penny stock category to something bigger, so they will gain, more respect. Some stock exchanges will drop a company from their platform if it reaches a certain price, like if it goes below a certain price. So that's like one of the reasons why companies go through like a reverse stock split. All right, so just look at a stock split is multiplying by 2 or whatever the ratio is. If it's a 3-for-1, you multiply by 3. So if you had 1 share, now you have 3, but the price is gonna be cut in thirds. So for the dividend investors out there, so how do these stock splits affect your dividends, right? So I've heard a lot of people say that, when a stock split happens, that means you're going to get paid less dividends because your stock isn't worth as much as it was. So that's completely false. So if you had 1 share that got cut in half, that means you now have 2, right? So the dividend you're going to get paid per share is going to be low because the stock was cut in half. So you're not going to get paid as much. But the total dividends that you're going to get paid throughout the year are still going to be the same because you didn't lose any shares. They just got cut in half. So it's important to know that like the total dividends aren't going to change. You're still going to get paid the same, but the dividend per share is what's going to change, right? So that's one thing a lot of people are like really confused about. But that is pretty much it about stock splits and reverse stock splits. And let me know in the comment section below if I missed anything. So make sure to go ahead and like this video for the YouTube algorithm. yeah, so make sure to go ahead and hit the subscribe button below if you haven't already, and I'll see you guys in the next one.